We are back live. We are back live with another episode of Premium Hunters, your new favorite series on the Wealth Network, the Wealth Snowball Network here on the YouTube. Oh boy, you got a doozy for us today, don't you, Bart? I do. It is our friends over at the Dish Network. And they've been going, look at that, 1 year, they're down 64%. Man, that is downtown to Chinatown, isn't it? It is. Look at that. And the wall keeps crumbling, tumbling down. Then why in the world would you want to consider a play on the Dish? It looks like a dirty dish to me. Well, my friends over here on Seeking Alpha, they have it as a sell, but look at Wall Street. Wally has it as a buy, and those propeller heads, well, they're usually at a hold, so they've got it on a hold. But look at these grades. They remind me of my freshman year in college. I had an A, I think, in gym class, an F in science, a D in math, D minus in history, and then I think I had a C minus in bowling. Bowling? Is that a college course? I did have bowling my freshman year in college, but I did get an A in that. Oh, yes. But the truth is I had a 1.6 GPA my first semester freshman year, but I did have a 4.0 in keg stands. That's right. But look at this thing tumbling down. I mean, look at this. Dish tumbles as BOFA issues rare double downgrade on wireless worries. Who in the world's BOFA? You know, BOFA these nuts. So we're not going to listen to them. Probably not wise. These are experts. I know, but I am an expert. No, you're not, Bart. You just play one on YouTube. No, I don't even play an expert there. Let's check out the Dish here and see if we can't go premium hunting, because when we click our way on over to our friends at Seeking Alpha, they think this son of a gun is 62% undervalued. And anytime they agree with us, then we always click over here and show that. When they don't, I don't even bring it up. So let's go back to the Robin and the Hood. We got the Dish pulled up here. We're looking 10 days out, so that'll be next Friday. Today is Wednesday, March 1st. Hey, spring, I hear some birds out there. Tweet, tweet, tweet. Hopefully it's not a turkey, because we like to soar with the eagles, not scratch with the turkeys. So we're looking to sell a put expiring March 10th, which is 9 days out. And look at these numbers, y'all. 11 cents on a $10 strike. So let's get out the abacus, beep, boop, boop, and let's see what that means. So if we've got 11 cents and we divide that by the $10 strike, we got a 0.011. Well, what does that mean, Bart? Does that mean anything? Well, it means this. So this is 9 days out. So theoretically, we could make a trade like this 3 times a month, right? Because there's usually, 30 days in a month. And in fact, in March, there's 31. This is 9 days out. Theoretically, we can make 3 trades similar to this per month. So 3 times 12, carry the 1, because there's 12 months in a calendar year, right, Terry? Yeah, that's right. So that would be 36. So if we multiply this return by 36, we'd be looking at, gasp, almost a 40% return on capital. Now, remember, this is math according to Bart, which is sometimes hypothetical. It's always hypothetical. Well, we're going to put it into play. We're going to track it on spreadsheets, and we're going to show it in real time, because that's why we make these trades in real time, so we can't just make stuff up, because some of these things are going to be dogs. Well, this looks like a bow, wow, wow, yippee, yo, yippee, yay. Isn't this like trying to catch a falling knife, or maybe a dirty diaper? Well, it might be. It could cut us up, could make us stink, or it could be like catching a falling goose, preferably golden. So let's look at the numbers here at this strike of $10 expiring next Friday. We have a delta, what's your function? We got a delta of 15 and implied volatility of 81%. Thought you were conservative. Well, not on this trade. We got to make a move here and see what we can make happen. Let's try for that $11, 11 cents per on 100 shares. Let's continue. It's at a pretty tight bid and ask, so that should work in our favor here. Let's put 5 on it. Let's go 5 contracts. See if we can't go 55 bills on this cash secured put. Here we go. Right here, right now, it is filled. There is 5,000 collateral held, $55 in our pocket. And remember, I'm not risking 5,000. I would still get free satellite TV just in case I have to buy 500 shares at $10 bills per share. So there you have it. But the chance of that happening is very low because we have an 84% chance of profit and about a 15% chance of having those shares put to us at $10. So this will conclude. Well, you know what? Let's take a closer look at Dish. Let's look at those earnings. Let's look at the earnings on Dish just to see what's up, because they just reported on February 23rd. They beat estimates on both the revenue. They were up by almost 180 million on revenue, and they beat on the earnings per share on both the GAAP and normalized. So what is the problem? Well, you know what happened? They just had that breach. They had the breach, and some information was probably click-clacked away by some Russian spies over there behind their MacBooks in the Kremlin. And you see some of the action here. Dish Network CEO says outage stems from cybersecurity incident. Data was taken. Well, it wasn't my data because I have DirecTV. Why? Well, they have the football package. Not next year. No, we're going to have to switch on over to the YouTube so we can catch every single game of those lovable Green Bay Packers. So this is just another one of those opportunities where maybe the market is overreacting. I really don't want to own Dish. I will take it at $10 a share if indeed it is put to us. But I think the market is overreacting. And if we happen to capitalize on that, then so be it. So that is this episode of Premium Hunters with your host, Bart Divi. See you in the next video.